Comcast's rocky road. A look at recent performance. The stock market can be a wild ride, and Comcast investors know this all too well. After reaching all-time highs in 2021, Comcast stock has been on a roller coaster. Inflation soared, interest rates climbed, and investors got spooked. Comcast, a giant in media and telecommunications, felt the heat. But remember, every dip is a buying opportunity for the astute investor. Comcast, with its vast empire, is not going anywhere. They own cable networks like MSNBC and Bravo, control a massive broadband network, and let's not forget Universal Studios and theme parks. This is a company with its fingers in many pies. Let's roll up our sleeves and dive into the world of Comcast. From cable king to streaming contender, a legacy tested. Comcast has long been a titan of television. Their cable bundles were once the envy of the industry, but times change. The rise of streaming services like Netflix and Disney Plus disrupted the traditional model. Suddenly, cable subscriptions started to dwindle. Comcast had to adapt and fast. Their answer, Peacock, their very own streaming platform. Launched in 2020, Peacock aimed to compete with the big leagues. It offered a mix of live sports, classic shows like The Office, and original content. But the streaming market is incredibly competitive. Gaining subscribers is a tough and expensive battle. Comcast's legacy as a media powerhouse is being put to the test in the age of streaming. The numbers game, dissecting Comcast's financial health. Now let's talk numbers. After all, we're looking at this from an investor's perspective. Comcast's financial performance has been a mixed bag in recent times. They've faced headwinds from cord cutting, increased competition, and the broader economic slowdown. Their revenue growth has slowed, profits have been squeezed, and their debt levels are substantial. But before we hit the panic button, let's dig a little deeper. Comcast still generates massive cash flow. Their broadband business remains a cash cow, and their theme parks have bounced back nicely after the pandemic slump. The key question is whether Comcast can leverage its strengths to overcome its weaknesses. The streaming wars, can Peacock fly high enough? Let's face it, the streaming wars are a battle of titans. Netflix, Disney Plus, Amazon Prime Video, HBO Max. The list of contenders is formidable. Peacock, Comcast's streaming platform, is a relatively new entrant in this crowded arena. Can it truly soar? The good news is Peacock has some advantages. It boasts a massive library of popular shows and movies thanks to Comcast's ownership of NBC Universal. From The Office to Jurassic Park, they have something for everyone. Live sports, including Premier League soccer and NFL games, also give Peacock a unique edge. However, Peacock faces an uphill battle. Building brand awareness in a crowded market is no easy feat. Comcast is investing heavily in Peacock's success, pouring billions into original content and marketing. Section 5, Broadband, a lifeline in the digital age. While streaming grabs the headlines, let's not forget Comcast's bread-and-butter broadband internet. In today's digital age, a fast and reliable internet connection is no longer a luxury, it's a necessity. And Comcast is the largest cable internet provider in the United States, giving them a commanding market position. Millions of people rely on Comcast's broadband network for work, education, entertainment, and staying connected. This makes their internet service a cash cow, generating consistent revenue even as the cable TV landscape shifts. However, the broadband landscape isn't without its challenges. Competition is heating up, with fiber optic internet providers like Verizon and AT&T expanding their reach. Comcast is investing heavily in upgrading its network infrastructure to stay ahead of the curve. Section 6, the Content Kingdom, powering entertainment experiences. Beyond streaming and broadband, Comcast is a powerhouse in content creation and distribution. They own a vast library of movies and TV shows through their subsidiary, NBC Universal. From blockbuster franchises like Fast and Furious and Jurassic World to beloved TV shows like Saturday Night Live and This Is Us, their content library is a goldmine. This content is not just valuable for Peacock. Comcast licenses it to other streaming platforms, sells DVDs and Blu-rays, and distributes it internationally. Their content creation engine fuels a multi-billion-dollar business that stretches far beyond traditional cable TV. Comcast is investing heavily in developing new movies, TV shows, and streaming exclusives to keep pace with this insatiable appetite. Comcast understands that content is king, and they are pulling out all the stops to maintain their dominance in this ever-changing landscape. Section 7, Wall Street's verdict, expert opinions and predictions. So, what do the experts on Wall Street think about Comcast's future? The truth is, opinions are divided. Some analysts are bullish, pointing to Comcast's strong cash flow, dominant market position in broadband, and the potential of Peacock. They believe the stock is undervalued and poised for a rebound. Others are more cautious. They worry about the secular decline of cable TV, the intense competition in streaming, and the impact of economic headwinds on consumer spending. They believe Comcast's growth prospects are limited and recommend a wait-and-see approach. The stock market is inherently unpredictable, and even the most seasoned analysts can be wrong. Investors should conduct their own thorough research, considering both the risks and potential rewards before making any investment decisions. Consulting with a financial advisor can provide personalized guidance based on your individual financial goals and risk tolerance. Section 8. The bottom line, is Comcast a buy? So after this deep dive into Comcast's world, the big question remains, is their stock a buy? Well, like most things in investing, it depends. There's no easy answer. It all boils down to your individual investment goals, risk tolerance, and belief in Comcast's ability to navigate the challenges and capitalize on the opportunities ahead. If you're looking for a high-growth, high-flying tech stock, Comcast might not be the right fit. But if you're searching for a well-established company with a strong market position, a history of generating cash flow, and a commitment to adapting to the changing media landscape, then Comcast deserves a closer look. Remember, investing is a marathon, not a sprint. It's about identifying companies with long-term potential and holding them for the long haul. Comcast has faced its share of challenges, but they've also shown resilience and a willingness to adapt. Before making any investment decisions, do your homework. Good luck and happy investing.